Hey guys, it's Eric Green. Listen, how do I make sure that all these potential clients sign my letter and pay me before we start doing work? I use Anchor. Anchor created a fully autonomous billing system and closes the cycle with zero errors. It sends our agreement to the potential client. We'll follow up with them automatically to make sure that agreement is signed. It alerts us when it gets read, when it's signed, and when payment is made. And this way, you know where you are every step of the way. I was so impressed with Anchor, which, by the way, is free. We went to Anchor and have partnered with them. Now, if you go and you register with Anchor, which is free, by the way, if I didn't mention that, you will get access to all of our checklists and letters, okay? But you have to go through our link, all right? Again, by the way, Anchor's free. There is a $5 fee per transaction if you're wondering how they make money. But given that our minimum retainer is $750, it's less than 1%. It's nothing, okay? So again, it's free. They charge the $5, transaction fee on payments, and it will automate your onboarding clients, make follow-up, just puts it on autopilot. It just saves you all that stress and you will close more deals. All right. So sign up here. It's www.sayanchor.com/tax rep. Again, sayanchor.com, sayanchor.com/tax rep, TAXREP. When you go through there, you'll sign up for free and you will have access to all of our letters and checklists, which will save you the trouble of recreating them yourself. All right. Go check out Anchor and put that closing process on autopilot. Guys, I've told my horror story before with S Corp clients and how do you know what reasonable comp is? My horror story is when they went after that CPA who was a friend of mine for $125,000, arguing that he knew and that he knew better and that he should have made sure his clients took reasonable comp. I'm a huge fan of RC reports. RC reports, it's about $1,400 a year. We're charging the S Corps that come to us under audit $750 a piece. We'll probably make between $10,000 and $20,000 with RC reports. But if you have S Corp or C Corp clients, they have to each year get a report, and the report is as simple as possible. RC Reports has a huge database of businesses. It will give you a report that you can rely on. And so far, to date, when we produce that report, not a single auditor has challenged it. The critical thing right now is for your clients to get that report to support the number they're taking on the return, that you're taking on that return that you're signing. Best way to do it, RC Reports. Go check it out, okay? You can find them. It's trn.rcreports.com. Again, trn.rcreports.com. Go there, you'll save $100. It will change your practice, create an annuity stream for you, and bulletproof your clients' corporate returns. The Tax Rep podcast is now proudly partnered with Nice Job, the experts in reputation marketing. Reviews are so important for attracting new clients. Before Nice Job, I would ask people to leave reviews, but they would usually forget, and I didn't have a way to stay on top and remember to follow up with them. That's where Nice Job comes in. Their smart follow-up campaign recognizes who hasn't left a review yet and automatically sends carefully timed reminders that can increase your chances of getting a review by 300%. I tried Nice Job for Tax Rep, and it's been a game changer. We added 33 five-star reviews in our first month, and our Google business profile is like a magnet for new customers. You can try Nice Job for free for 14 days and get 50% off your first 3 months by visiting nicejob.grsm.io/taxrep. nicejob.grsm.io/taxrep. I'm going to put a link in the description of the podcast. Try it. It will be a game changer for your business as well. How do I manage my tax rep practice? How do I get transcripts? How do I track what is going on with the IRS with every single one of my client cases? How do we complete the offer forms, the powers of attorney, everything? We use Tax Help software. Tax Help software is the cornerstone of our practice. We use it for its intelligent ordering. Every single night, it will update the transcripts on our clients, so we will see things happen long before those letters even go to the mail. We can then, react. We can let the client know. We can get all the transcripts we need to determine what our client's best options are, when is the debt going to expire, and we can fill in all of the IRS forms and get them filed accurately, the analysis done correctly. If you're interested in giving it a test, go to taxhelpsoftware.com, use promo code TaxRepTrial, all one word, all caps. You'll get a free 2-week trial. Again, that's taxhelpsoftware.com, TaxRepTrial, all caps, for a free 2-week trial. If you love it and want to buy it, use TaxRep10, capital, all caps, TAXREP10, TaxRep10, all caps, one word. You'll save 10% on your purchase. It will be the engine that runs your tax rep practice, just like it's what we use for ours. Hey everyone, listen, thank you for joining us on this week's Tax Rep Network podcast. I am joined by my great friend, Don Brolin. You've probably seen and heard Dawn speak. She is aside from being a terrific CPA and forensic accountant, she is a prolific speaker and writer. And what we're going to be covering today is the enforcement around earned income tax credit, which is no better time of year to do this, to talk about this. But just as background, Dawn has Powerful Accounting LLC. It is, is it Inc.?
It's an Inc. now. Inc. We got fancy.
Powerful Accounting Inc. Here in Connecticut. She is a CPA, CFE, has her master's in accounting, and you can read her bio online. It's too long, the program would be over. So anyway, Dawn, thanks for doing this.
I love chatting about it. We're such nerds. We love to talk about taxes.
Well, we met at a tax meeting. It was a dinner meeting with the DRS, the one that went sideways with the old commissioner. I'll never forget that meeting.
Yep.
15 years ago.
Oh yeah, it's got to be since it was probably
around there.
Around 2008, 2009, I think. That's a long time
ago. I think it was even earlier.
Might even have been earlier. It was a long time ago.
Right. So listen, if Dawn and I we're just actually talking about this subject. That's why it's a great idea to just do a podcast. So the earned income tax credit, which is very popular. I mean, truth is, it's welfare is really what it is. It's right. The government's running welfare through the tax code. And in fact, when everyone's like, why can't we just have like a simple tax code and the postcard? Because the government runs social policy through the tax code. For instance, we like real estate. It creates lots of jobs. We want people to invest in it. So you have about depreciation and real estate professionals, no losses and all that stuff, passive income. The earned income tax credit is effectively welfare. It's welfare and it's administered by the IRS, and it is an area that is rife with fraud, and the government knows that. So, for instance, if they really wanted to get rid of it, they would just do away with it and put it with the way they normally deal with welfare through the states, which has its own fraud issues, but they accept a certain amount of that. However, if you're a preparer, this is an area that the government, I think we can agree, is focused on. And what's interesting, Don, I'd love to hear your take. When they come in for the earned income tax credit audit and they ask for a handful of the returns, my experience has been they're not so interested in those returns as much as they are in the preparer. Right.
Well, it's low-hanging fruit for them just as much as reasonable compensation, that's a whole nother podcast. But yep. That's easy low-hanging fruit for the IRS. It's almost like they come in, they're interested in what do you have for backup, and then they'll say, oh, you have backup? All right, see ya, and off they go. But if they sit down and they're like, give me X, Y, and Z, and you're like, oh, I got to go find it, that's not good enough to them. And that's when they start digging their heels in and their claws.
Yeah, no, I mean, I had a case a couple of years ago with this. They went in, and so for most of the practitioners listening to this, say, "Look, Eric, I already know this, right? I got to do the checklist, I have to have that on file. Most of the software has it built in, so it saves the checklist as part of it."
Right.
But here's the deal: when the auditors come in, great, you have the checklist. They want to see all the backup files. And what are they looking for? Here's what they're looking for. They're looking, do you have the backup that supports that those dependents can be claimed? Now, so one is, do you have the backup? Two, they're going to look through the file, and what they're looking for is something called additional inquiry. And I'll get to that in a moment. But the other thing they asked, and by the way, I learned way more about the EITC than I ever wanted to know during this audit.
Right.
They said, have you trained all of your people? And this practitioner said, oh, well, I told them to go online to the IRS, which has like a free program, and to do that program. They said, where are the certificates of completion? You don't have them. Here's the deal, and we'll talk about each one of these. You need to have done the training. If you have staff who are preparing the EITC, they have to have done the training. Make them go take a program and get the certificate. You need to, because here's what you want to have happen. Auditor comes in, your staff, where are the certificates? Here are the annual certificates. Every one of my people has to take the training again. You know what? Already the auditor's probably thinking, I don't know if I'm going to find too much here, but okay. The checklist, it's in the software. I've never had anyone not do the checklist, so they're all there.
The software is going to tell you, hey, you haven't done the checklist. It's going to warn you anyway. So, there's no excuse there.
Won't let you claim the credit without it.
Right.
Then the next thing, though, is where's the backup? My gentleman, especially if year to year the dependents don't change, well, it's in the file. Here's what they pointed out to us. And by the way, they dropped the hammer on this guy. I mean, we ended up going into the federal court of claims. I ended up dealing with the DOJ lawyers, which was a strategy. And you and I will get into that in a moment. But what they basically took the position is, well, if you had it in a file in storage, you didn't have it present when that taxpayer sat across the desk and you claimed the credit.
Right.
And of course, the theory is, yeah, but it was the same as last year.
I know, right? Yeah.
Yeah, the DOJ lawyers, you can't see me, but I'm flashing. For those of you watching this on YouTube, you just saw what I did. They just gave you the finger. Basically, yeah, we don't care.
Yep.
The fact is, when you sat with that taxpayer, you did not have the information. So the lesson is that information has to be in each year's file. Now, these days, I would almost have an electronic permanent file, and that's there on your computer, only because if the auditors come in, you can, or even if there's a question from the taxpayer, you can pull it up. It's here. It's right here. So while they're sitting here, I can pull this up and go through it and say, yep, no, I've got the backup. I got the birth certificate. I've got the, if it's a nephew, but they're staying with you, I've got the letter from the high school with the address. Now, the letter from the high school, I actually think you probably should update that every year. The birth certificate, no. Because if your son or your daughter, they are what
it's
they
always
are.
Your kid.
Right. But the nephew, well, I have a letter from the high school from last year. Yeah, but how do you know they were there this year? How do they know they meet the requirement? Here's the other thing that I thought was interesting. In this situation, there were like 50 files. 40 did not change. But there were 10 where there was either a new dependent or one who had dropped off. There was a change of some sort. They actually hit him, or when they dinged him, they noted there was no additional inquiry documented. There is a requirement that if you make an inquiry of the taxpayer, you documented it. So in other words, Dawn, I know you had 2 sons and a daughter. Now you're claiming 1 son and 1 daughter. Where's the other son? Oh, he's living with his father. You have to document that. Asked about the other son. taxpayer said now living with the father, not claiming, right?
Yep.
Or the son is now living with her, provided the backup. So what happens is when they went after him, I think it was $38,000 in penalties.
Jeez.
They basically cited you didn't train your people, you did not have the documents in the current file, and there was no additional inquiry noted, even though there were changes on 10 of these.
Yep.
Right.
Well, and I want to go back just for a second to the certificate conversation.
Right.
What I find interesting when you talk about that is every year we have to submit our CPE to our state boards in order to renew our licenses.
Right.
What an interesting way. Maybe I shouldn't say this and put it on the podcast, but wouldn't that be easier for them? I'm just going to go to the state board and I'm going to pull all the preparers of the state board and see if in their CPE if they submitted a certificate for EITC.
Right.
But we won't give them that idea.
Well, and because, you're talking about all the different states, it's probably slightly more difficult to get it all, but that will be getting easier and easier.
Yeah. And I think that's something as it becomes more, I don't know, maybe not in my lifetime that the IRS would actually get it together. But if they do, and they actually make it where, you've got, and that actually would be if they were nice people, it would be nice for them to offer, well, you said they do offer it for free, but it's like if we had more of an electronic filing system that we could actually interact with the IRS on here, like they said, okay, you got to have this certificate, have this, like almost like what you do for your board, but they have their own way that there's certain things that they are requiring instead of coming after us and being our enemy. I mean, we're really at the end of the day, we are the IRS's tax practitioners. We work for them essentially because we're collecting money for them, whatever. But it's like if they could really start to interact more with the practitioners, which I think they failed tremendously on doing already. But if they could improve that process and say, hey, these are the 5 certificates you need every year. This is what you have to do. You log into the website and you do all of that stuff. And we have like an account. I mean, I could go deep into the whole IRS and all that, think about power of attorneys. Who do I have power of attorneys on that I don't want to have power of attorneys on? I'd love to see that list, right? All they give you is the EIN. And you're like, oh, crap. Now I got to look it up.
Well, yeah, you have to do the FOIA for that, right? You do that Freedom of Information Act for your CAF listing. And then you get this, the first time you do it, it was like 2,000 pages. Yeah, that's a whole podcast. We could do just on that. Yeah. But yeah, no, the biggest thing about this, for the practitioners listening to this, is what happens if you do get penalized?
Yes, this one's key. Yep.
Yeah, because if you do get penalized, and I've had people call me, it's like $5,000. They don't want to pay me. Should we just, I'll pay it and get rid of it?
The answer is no, never.
No, not a preparer penalty. A preparer penalty. And it could be for anything, but especially for this, you don't agree, you don't pay, you appeal. You always appeal. Here's why. The practitioners that just pay it, inevitably what happens, when paying it, you've just admitted it. It will be referred from the return preparer office to the Office of Professional Responsibility. They will then do an expedited hearing because there's nothing to the hearing. You've admitted it. Admittedly, no pun intended. Karen Hawkins and I have gone over this, and Karen agrees with me. The fact that you pay the penalty it's a business decision, right? Because interest is right. That should not be considered an admission, but unfortunately, that's not the way the office sees it. They view it as an admission. So the takeaway today, if you're a preparer, if you get a preparer penalty proposed against you, you always appeal because it's not about the money anymore. It's now about your license, your ability to practice.
Right.
You're an EA or CPA, they will go and try to take your license. And if you're a CPA, if the IRS does it, they notify the state is going to follow suit. They're going to take your CPA.
And that is awful.
Well, I don't know about you, but if I lose my bar license, just rest assured, I have no other meaningful skill. Okay, I'll be the homeless guy in front of the 7-Eleven. So, yeah,
Well,
no,
it's so true. And it's interesting too. I always say I'm gonna protect that license. And you think about the earned income tax credit in and of itself. What are people really getting? How much money are they actually getting for it? And you're dealing with low income people, typically low to medium. It's really all low income, like you said. It's part of wealth. It's welfare. So those people don't want to pay you to a large fee to prepare their return, but yet you're doing all this extra work. And I think that that's a really good message on this, that understanding what the requirements are, what you're supposed to be doing, getting the certificate, which I don't, until Eric and I had a conversation, I didn't even know that was a thing, to be totally honest. The first thing I'm doing is going to sign up for one of them. And it's like, because I just didn't know. And I think that that's part of it, is that fear of what I don't know is what keeps me up at night. What am I not doing that I'm supposed to be doing? But think about, if you do have earned income tax credit people, you need to make it clear. Like for me, listen, it's going to cost you $500. It's going to cost you $500 for me to fill out that checklist, get the backup, get my certificate so I can file on your behalf. Otherwise, go ahead and go to another, wherever the heck you want to go. But I can tell you what, right now, that starting, immediately, that is going to be a larger fee for earned income tax credit because of my liability and my exposure.
And the problem is the practitioners that deal a lot with it are generally in low income areas where they're not getting a lot of those fees. And
I think, you have to use your judgment, but at the same time, I always say, listen, compliance is the reason that people, why are you so expensive? Well, let me ask you a question. If your job was on the line and your lifestyle, your ability to feed your family was on the line because of requirements you had to do, would you make sure you fulfilled them? Yes. Would you expect to get paid for them? I would think so. And so I just look at it that, Eric, I had a client referred to me recently. They pay to prepare for their return $183. And I'm like, are you absolutely killing me? Like, are you kidding me right now? So I'm going to go and give them a quote that's going to be 3 times as high as that, because I value what I do. And this is a perfect example of, it's almost like compliance on steroids. Like, we got to file a return. It has to be accurate based on information provided to us by the client, right? So we're covering ourselves there because we are relying on their information, and that's all cool. But when it comes to a situation like this, where there are higher requirements than just preparing a return and making sure you do it right, that's where the fee has to creep up. And that's why, but Eric, they have low income tax prep. They can go to the low income, the VITA, the Volunteer Income Tax Assistance Program, send them there, say, listen, you go to the VITA program, here's the office or whatever, and send them off and on their way and let them deal with it.
Right.
And so that's your decision, but I'm certainly not going to invest the time to do it and then not get paid for it. Not happening.
Oh yeah, no. With the $1 Million Practice book out, I've been harping on people that to upscale, and you and I are talking about this advisory conference. The goal is to upscale your practice. But listen, if you're a practitioner who is sitting listening to this being like, yeah, that sounds great, but where I am, I can't. I get it. But now, as part of your business model, you've got to factor all of this in and take care of it. Yeah. And just know, in the event there is a penalty, we don't pay, we don't admit, we appeal, we kick the can. And again, what's the rationale there? If I'm going to end up paying it ultimately anyway, because what happens is you appeal, you're talking 6-9 months a year at a minimum. Now, they'll want you to get into some sort of a payment arrangement. You get into a monthly payment arrangement. The appeal is pending. By the time that appeal is said and done, what happens is another year has gone by. OPR and RPO have now moved on. They have other taxpayers. But for me, just to, cross, T's and all that, we can go ahead and file in the federal court of claims or federal district court. You have to pay 15% of the penalty. We file the refund claim. That'll take another 6 months to a year, even if we know we're going to concede. Now, that's probably a little bit extreme. The point being is we want to get further down the road, because to my mind, you remember the game Frogger?
Oh gosh, yeah.
Yeah,
Absolutely.
the river and the log, they keep going. So if you think of OPR, we have this problem. If we appeal, we're going to let the alligator go by, right? And then if we end up settling, getting into a payment arrangement and concede at that point, no one, I've never had OPR come knocking a year and a half, 2 years later. They don't. They've just moved on.
Right.
But if you pay immediately, now you're on their radar. You get, and for a prepare penalty, it's an automatic referral. So can't
Never do that. So let me ask you this question then. So if that, I'm not going to use myself as an example because I'm not putting that into the universe, but
Right.
If someone gets this penalty, can they represent themselves in the appeal, or do they call Eric Green's office?
Well, listen, theoretically, I mean, look, of course they could represent themselves. The issue is it smart to?
Right.
And here's what I have found. Most of the practitioners who come to see me about this, they tend to get very, like anyone representing themselves, emotional about, well, the auditor was sort of a jerk and this. Appeals doesn't care. So for the benefit of having, like, even like Dawn, you representing them or me, is we're more dispassionate. Say, look, the auditor chose to ignore this, right? We're not at the end of it, they're a jerk and they had a fight. No, here's what happened. Here's the requirement. Here's what our client did, right? Yeah, they may have, they didn't have the additional inquiry, but that's because it was the same from year to year. Well, yeah, the stuff was in the file, but it was the same year to year. So where you and I would focus very much on, here are the requirements, here are the facts, here's why my client basically did everything they could to comply and should not be penalized.
Right.
Versus they start in on all of the emotional.
Right.
And appeals doesn't care. They don't care if the auditor was a jerk. They don't care if the auditor didn't listen to you. That's not what this is about. They're saying you did not meet the requirements, and yet you filed these claims.
Right.
So that to me is really the benefit of having someone represent you, is they are clear-headed about their approach to this. We had one where they went after the person was doing, he was unenrolled, was working on his EA. He was doing, the unreimbursed employee expenses.
Yep.
And people brought him receipts and stuff of specialized clothing because they were a nurse. That's not specialized. Specialized clothing is like those rubber suits that firemen wear. It's something that you wouldn't wear out anywhere else.
Right.
All right. The fact that you bought scrubs and then took them to the dry cleaner, that's not specialized clothing. Anyway, so he is on and on and on about being targeted by this auditor. And I think there was something there. I mean, the auditor tried to refer him to criminal refused it. He tried again, criminal refused it again. The auditor had something wrong with him. And by the way, during this process, the auditor ended up getting fired. I never found out why, but was no longer with the service. And the supervisor in another area told me, they're like, yeah, they got rid of him. Anyway, so there's something wrong with the auditor. But what I explained was, okay, they shouldn't have had the deductions.
Yeah.
But it's not because they went after him for reckless disregard, for intentional. And I said, but we have backup. It's not that these people didn't spend this money. They did. He got the backup. You don't even have to get the backup. You don't under Circular 230, you don't have to audit your client.
Right.
So what I said is, this isn't education. This is a negligence issue, which brought the penalty to $5,000 versus if they went 5 for each of them, it was like 25 or 30,000. And the whole thing got resolved for $5,000. But that's because for me, I could sit and explain dispassionately. You talk to him, he got hysterical every time. The auditor was a jerk, and he doesn't like African American. I'm like, I told him, you're probably telling me, you're probably spot on. Appeals doesn't care. This is not about you and the auditor. This is about what you did. And so let's just, almost like, what was it? The old crime show, Just the Facts, Man.
Yeah.
Dragnet.
Yep.
Dragnet. Just the Facts, Man. That's what appeals is focusing on. So that's a long-winded answer. If you can at all possible, you want to be represented by another person, not be doing it yourself. First of all, you don't want to be there. You don't want to be answering questions off the fly. I wouldn't want to represent myself.
Right.
Okay?
Right.
Because you can't help but get emotionally involved in this. I would have somebody else here go who is this passionate and can sit there and be level-headed. Okay?
Well, here's another great point too, or great question, I guess. So now people have heard the podcast. They're like, "Yep, I get it. I'm scared now. I'm ready to be compliant." Like, just admittingly that, yeah, I haven't been compliant. So we go ahead, take the certificate. They come in and they're like, maybe they audit 2020 or 2021, and you're like, yeah, I didn't catch that I had to do that. So now, but I did. I've corrected my behavior because I wasn't aware of it. Now I'm aware of it. What do they do in that case? I mean, I'm not sure you've even had experience with that, but what do you think?
You can't undo it. So there are certain things you can't undo.
Yeah.
All right. Like for instance, let's say you don't have backup. If the taxpayer comes back this year with the same dependents, you get the backup, then you're probably okay, right? Because you at least got the backup. I mean, listen, the horse is out of the barn. You can't put it back. You can't go back and get CPE that you didn't do back then. But I think what you do is, at the very least, let's fix it and go forward.
Right. Yeah, that's probably the best advice. So, and you're right. If this year, this is why this is a great timely topic, because now as with moving forward here, any earned income tax credit people that come through, first of all, evaluate your clients. Which ones do have earned income tax credit? Identify those people, and you'll have to make a little bit bigger of an effort this year to make sure you get backup. And then, moving forward, like you said, I mean, if we got to get a letter from the high school or whatever it may be, or from the doctor, in that year. So I know for 2022, there was a bill that came for this particular child to the house. Yep, we can show in 2022 that they were still at that residence because of the doctor's note or the school, detention letter that came home or whatever may have happened. That's probably how my mom would record that. But so that's all really good advice. So it's like everybody needs to start taking action. And this is another hot topic and a low-hanging fruit for the IRS to come after us, which is just a whole nother thing.
You don't want to do returns. You want to do advisory. More on that this spring.
Yes, more on that this spring. Advisory. Let's get out of this pickle we're in. Right.
So, listen, with that, good luck everyone with tax season. I mean, the podcast will keep going, but still good luck with tax season. If you are doing EITC, hurry up, go get a course and get that done. Make sure you get the checklist done. Make sure you've got your backup. Document your additional inquiry. And in the event you do get a penalty, hire me or Dawn, and never just pay it and concede.
100%. Awesome. Good stuff, Eric. We're killing it.
Yes. All right, everyone. Listen, thank you for joining us. And until next week, keep going and don't lose your mind. I just had Randy Crabtree on about mental health.
Him. Yeah.
Yeah. Make sure you get some free time, even during tax season, to just breathe the air and not kill yourself.
And, it's great that you said that too. I'm doing a webinar for ADP actually coming up here pretty soon. I think it's February 13th. And it's about kind of like taking back control of tax season. And one of the tips that's in that webinar is about blocking your schedule, blocking your calendar. I had Tracy put in my calendar. It's the first time I've ever done it. 1 hour for a break. Now, what I do with the break is up to me. So I have 1 hour of maybe I want to grab something to eat that's not sitting at my desk. I'll go get something to eat, have, 15 minutes to eat some food, 20 minutes, maybe take a walk the dogs or whatever. Or maybe I just, I'm almost done with this one return. I want to buy back 20 minutes to finish that up, or whatever. And, the other tip that I think would be really helpful for people who are getting ready for, really getting into the thick of it is thinking about getting yourself out of the office, doing something that is not related to your work, and just getting out. And there's just, I've got a lot of real great tips that you'll be able to see the recording. I'll have it on my website and stuff like that. But just, don't let you take control of tax season. Don't let tax season take control of you. And the 80-hour work week is not a badge of honor anymore, people. The badge of honor is under 40 hours a week.
Right. No, I couldn't agree more. So Dawn, listen, thank you. Thank everyone for listening in. And until next week, stay safe, keep plugging away, and make sure you take mental health breaks.